24/7 cash flow family, the China tariffs have been reduced by 115% seemingly overnight. We're currently on a 90-day pause while we continue these discussions and see if we can come to a long-term resolution with China and continue to have them as a trade partner. But what does this mean for real estate investors? Is this good news? Is it bad news? Let's talk about it. And click the link in the description to tap into our 24/7 cash flow community where we teach you how to leverage real estate to break free from the 9 to 5. Let's get it.
We come to agreement that that our reciprocal tariff rate will go down to 10% on the United States side, so it goes down 115%. We enter into a 90-day pause period for negotiations, which both the Chinese and the United States are very committed to, and the Chinese on their side also go down 115% to 10%, and they remove the countermeasures that they have in place. To be very clear, other measures that the United States has put in place in the past, whether it's tariff measures from 2018 or since, tariffs under other statutory authorities, tariff rate to fentanyl, those remain unchanged for now to the side. I'll just make one point, is that both the Chinese and the United States agreed to work constructively together on fentanyl, and there's a positive path forward there as well.
And there's about a 20% tariff for the fentanyl issue. So tariffs are still sitting at about 30 to 35% on China, but only 10% on U.S. goods. So it's a good overall reduction for all of us, but let's see what else they have to say.
And Treasury Secretary Scott Bessent on what is expected next. Watch this.
Whether it's medicines, whether it's semiconductors, steel, the other, we've identified 5 or 6 strategic industries and supply chain vulnerabilities, and we will continue moving toward U.S. independence or reliable supplies from allies on those. But the consensus from both delegations this weekend is neither side wants a decoupling. And
I think that that's important. If neither side wants a decoupling, we want to be trade partners. We need each other, in fact. And China's feeling that impact from these tariffs. They've been pretty badly hurt by them, I say. There's been a lot of protests out in China by citizens of China who they're feeling the impact. They're getting crushed. Their housing costs are going through the roof. It's not a pretty picture. So these trade wars can have as much impact as like a physical war. And in some instances, it's even worse. But what do you guys think? Should we be more independent, the United States as a country? Do we need independence in the event of war times where we can produce our own goods internally and we aren't reliant on outside trade partners, some of which aren't our real allies? And before we go, I wanted to read through this article very quickly because it breaks down the understanding of the impact of tariffs on the real estate industry. So far, according to the National Association of Home Builders, and I'm going to blow this up a little for you guys, the NAHB reports that about 7% of materials used for new residential products last year were imported, raising concerns as tariffs drove up costs. Since construction materials typically account for 50 to 60% of the total cost of real estate projects, price fluctuations significantly impact budgets, timelines, financing, and investor confidence, all of which has a big impact on us as real estate investors. And when it comes to rising material costs, it says, although the U.S. primarily sources steel and aluminum from Canada and Mexico, China's role as the world's largest manufacturer of construction materials likely means that tariffs will disrupt supply chains globally. The existing tariff on steel and aluminum will likely continue to increase expenses for key structural components, while the Chinese tariff impacts electrical fixtures and plumbing materials, straining budgets across real estate projects. So what happens when these tariffs go into place is it starts to hurt supply chains, the time it takes to get materials from point A to point B. And when supply chains slow down, the delivery of affordable housing to the market slows down. So as a real estate investor, if you are building affordable housing and you're doing it with like our 24/7 cash flow framework, where we're primarily rehabbing existing structures, you can go much faster than new builds. So you can deliver affordable housing to the market faster, even during supply shock times like we're seeing today. And if you're supplying affordable housing in the middle of an affordable housing crisis, you're probably going to get very wealthy. And lastly, on housing affordability, tariffs are likely to raise material costs for a typical home, increasing pressure on Tariffs are likely to raise material costs for a typical home, increasing pressure on housing affordability. Supply chain disruptions, particularly for components sourced from China, have caused further delays, decreasing housing inventory and placing additional pressure on prices in markets already experiencing all-time highs. The housing market faces further challenges from rising mortgage rates, making home ownership less attainable, especially for first-time home buyers. So overall, this is great news for real estate investors because as tariffs comes down, the cost to build rental properties decreases almost dollar for dollar, which means your real estate investment deals become more profitable. It's also better for the overall global economy and supply chains, and that's good for consumer confidence and investor confidence, which you need to have good liquidity in the real estate market. But keep in mind, this is only a 90-day pause, so things could get worse again before they get better. If you got value, like, comment, subscribe, and click the link in the description to tap into our 24/7 cash flow community where we teach you how to leverage real estate to break free from the 9 to 5. Brian Grimes, your real estate mentor. I'll see you on the next one.